Hey guys, good afternoon, everybody. Today is Wednesday, March 9th. It is 1:58, 2 minutes from 2. I'm gonna set up the room real quick and then we can get started with this mentoring session for today. So I'm gonna get this all set up right here. Let's see. Everything all good right here. I'll have to update that later. Looks good. Looks good. Solid. All right, almost done. Couple more things here. Check off. All right, let me get this link sent out to you guys here in the premium. And then we can get started with our session for the day. All right, cool. Link's been posted. Let's get this set up over here real quick. All right, cool. Everything looks good to go. All right, guys, let me just give it some time for people to join in. It's 2 o'clock right now, so started a little bit early, but it's all good. All right, I'll let people join in real quick. Give it a few minutes. All right, everybody, good afternoon. It is Wednesday, March 9th. It's 2:01. This live session was scheduled to start at 2. So we'll give it a few more minutes for people to join in, and then we can get started with our session today. So just a reminder, guys, this group mentoring session is basically a Q&A for me and you guys. So if you guys have any questions, feel free to drop them in the chat. I can answer whatever questions you guys have regarding any of the strategies, any of the techniques that we cover, any of the confluences. I mean, anything in general, guys. If you guys have any questions, this session is for you guys. So this session will go on for as long as you guys have questions. I can answer anything regarding risk management, trade psychology, FTMO. I mean, literally whatever you guys need help with. So we'll wait a little bit longer for more people to join in. But if you guys have any questions, feel free to put them in the chat, and then I will answer them accordingly. So it's only been 2 minutes since 2, so we'll give it a few more minutes for people to join in. There's only about 13 people in right now, so. See, Matt said, welcome back, guys. Definitely, Matt. Matt said, my question for you in the group. Let's see. So I don't see any. Let me pull up the Telegram real quick. See. Typing it up right now in the chat. So I'll just. And I'll just be watching CNN until you guys have any questions. Let's see. Okay, so one question over here from Matt. Matt's asking, how do you manage stop loss and never to move it no matter what? Please teach us. I mean, it's pretty simple, Matt. It's the same way that we've been doing for the past year now. We use the DOM. So if you set your stop loss, you enter the trade, it sets your stop loss automatically, and you're not supposed to touch it. The only problem that people have when they have issues with the stop losses is your own personal problem, right? You guys are the ones that are moving it. Once you set your stop loss, just leave it as is. Don't touch it. I don't know if you're using the DOM or if you even know what I'm talking about. I know you've been here for a while, so I'm pretty sure you're familiar with the DOM, which is short for depth market. But I mean, that's pretty much as easy as it gets, right? You take your trade with the DOM, the stop loss is automatically set, and you don't do anything after that. So the main issue comes from the trader personally. Like the stop loss only gets messed up because the person trading messes with the stop loss. If you have a stop loss set, then don't move it. You just leave it as is. Main thing is probably trade psychology. I guess that could be your biggest issue. You probably don't trust your trade. You're not confident with the trade that you take, and that's why you move it. So your question is mainly it's an individual question, right? It's not a problem that everybody has. Yeah. So Matt said, I don't use a def, but I should. You 100% should. I think if you start using that, you don't have the issue, because the problem is not just with you, but with a lot of people, is when they enter a trade, you start to get scared to put a stop loss. A lot of times people don't even end up putting a stop loss. They just enter the trade and then they just don't put a stop loss. And I think that's probably your main issue, Matt. And I'm pretty sure you run into that issue a lot of times where you'll enter a trade, it'll go into drawdown, and then you don't want to put a stop loss. Exactly. Yeah. So I already know, like, everyone runs that same issue. Matt said, that is me. So that's a common issue with a lot of people. They'll enter a trade market order. They won't set a stop loss, and they won't set a TP. That's dangerous, because if you guys don't set a stop loss, you'll just keep letting it run deeper and deeper and deeper into drawdown instead of just eating the loss. In a lot of instances, it's better if you just eat the loss and move on to the next one. Because if you do eat a loss, it's usually just not a bad, it's just usually a bad trade, and it's not good market conditions. Because for the most part, our win percentage is pretty high if you use the strategies properly. So if you just trust the strategy and just eat the losses when you need to, you'll bounce back with the next trade or the next couple trades. So I think the main step for you, Matt, is probably to use the depth of market tool. If you don't know how to use it, unfortunately, I can't open it up I'm on my laptop right now. So I can't open up MetaTrader. It's not logged into mine, so I don't have an account logged into there. But if you do open MetaTrader, you'll just right click on the chart. Once you have the account open, you'll click on depth of market, and then from there, you can set your TP and stop loss automatically. So other than that, let's see if there's anything else here. So hopefully that answers your question, Matt. I think that the first step for you is probably to use a depth of market tool. Once you use the DOM, I'm pretty sure you'll see a huge difference. Once you enter a trade, just don't touch it. Let it run, and then it'll hit TP or it'll hit stop loss. You don't have to adjust anything. So once you do that, you'll start to trust your entries and your strategies that you're applying, because if you're applying it properly, it should most of the time hit TP. So there goes your question there, Matt. Yeah, Miles said DOM is the truth. Yeah, I know, definitely. Let me scroll up real quick and see what else I'm missing. So there's another question here. So that's it for Matt's question. Yes, Rami's asking, this is called depth of market tool on MT4. Yeah, it's an MT4 tool. So you can use that by right clicking on the chart, and then you'll see the option there when the pop-up comes up with all of your options. Yeah, no problem, Rami. Matt said, thanks, brother. I must stop that from this minute. And I think once you do that, Matt, you're going to see a huge difference. Because what I would do is, if you ever enter a trade with the DOM, just enter the trade and then just walk away from your computer. Check your phone every once in a while to see if it's closed out. It should close out within a few minutes if you're scalping. So just take the trade, step away, come back, and you'll see if it hits TP or stop loss. I'm pretty sure it's going to hit TP, because majority of the trades that we do take hit TP. As long as you're using the proper strategies and you're using proper risk management with the confluences. The more confluences you have, the better. Other than that, let's see. Yeah, no problem, Remy. Yeah, no, exactly, Matt. Matt said I think if I can control that, I will be very good. Definitely. I think the main thing with you is probably, just like I mentioned earlier, probably not you're not too confident with your entries. So you just get too nervous when you enter it. But once you have the DOM set, just leave it alone. However, if you are using the DOM, I would probably recommend that you the use it during like New York session or London, because Asia, the spread's just too wide. So you don't really want to use a DOM during Asia unless you're like, unless you are using like a really big or wide stop loss. Because if it's too tight, you're going to get stopped out really easily. See, next question here is from, so I think that's it for that question with Matt. Let me scroll up real quick. Next question is from Jay. Jay's asking, how do you know when the best time to hold a trade longer and getting stopped out too early? There's no one way to do it, Jay. There's a lot of different ways to determine that. If your confluences are very high, like you have a retail sentiment, fundamentals, and technicals, everything's pointing in one direction. That's probably an indicator that it's better to hold longer, right? Because you know the direction of price. But the thing is with the market right now, the volatility is too high. You'll see spikes up and down. So there's no set in stone way to identify when is the best time to hold it. You always have to take risk. It's either you're going to try to risk it or you're just going to go for TP. For me personally, I think right now the best time, well, right now is like the best time to move your stop loss and profit because the volatility is too high during the sessions today, like even this morning, right? So let me just go back to like 6 o'clock. So you can see from 6 o'clock over here, or yeah, from the live session. If you were to take these trades and you were to move your stop loss and profit, like say, for example, there's no trade here, but I'm saying, for example, if you take a sell here and price dropped down here and it pushed back up, and then say you moved your, so say you initially entered right here, right? Not that there's an entry there, but I'm just going to use this as an example. So say, for example, you entered right there, price dumped a bit, right? And then it pulled back right here. So at that point, you would have moved your stop loss and profit, and you would have just kept riding it, and you would have moved your stop loss like maybe to the next swing high right there. So as price continued to drop lower, you just keep moving your stop loss lower and lower. And then when it pushed up, it would have stopped you out right here deep in profit for about, I guess, like 700 pips or so. You technically could have held longer and rode it down to here, but with this type of market, I don't recommend doing that because you never know when price is just going to reverse on you. So it just depends, right? It's case by case basis. Like right now, it's not really that easy to determine when's a good time to hold because there's a lot of different factors in the market. Like I think it was on, was it Tuesday? Like when Biden spoke or last Friday. So last Friday is a good example. Last Friday was NFP and it was bullish, right? So we knew price was going to go up because it was bullish. However, there was like Russia news. So like price was going down. So like if you go back to the market on Friday, today's the 9th, we could go back to Friday, which was, I think like the 6th. Either the 7th or yeah, something like this, like the 7th or the 6th, I think. No, it wasn't the 7th. Actually, sorry, I just realized it's Wednesday. So it was like a while back. Okay, so like right here, like on the 4th. Okay, so on the 4th, if you remember from the morning, 6 o'clock, you had this big spike to the upside because NFP was like positive. We knew it was going to be positive. It spiked up, and you probably could have taken it and held it longer, but then if you go into nuclear war or something, right? And then price came right back down. So for me personally, right now is not really a good time for you to like experiment with this. I don't think you should experiment unless you really know what you're doing. Obviously, you probably don't know what you're doing just yet. Not that you don't like, you're not 100%, but experiment with it right now. I think at this point in time, maybe until at least the wars kind of calm down a bit, it'd probably be best to move your stop loss and profit, whenever possible, because if you don't and you get too greedy, you can always end up losing a trade when you could have just closed down profit. So see if there's anything else here. So I think that's it for that. I mean, unless there's anything specific, because like your question is super open-ended, Jay. Like you're asking, how do you know when's the best time? There's no best time. Like literally, you'll know it's the best time after it's already happened. Like for example, here, price would have dropped, and you're like, oh, I should have just held on to that. But when the actual move was happening, you weren't even thinking that, right? You were probably nervous and not really knowing when to move your stop loss and profit and when not to. So it all comes with practice and execution. Like the more that you practice it, the more that you apply it, the easier it'll be. But I can't really tell you that there's a best time, because there's never a best time. It's like you trying to time the market, right? You can't time the market. The market will do what it wants to do. And it's just really up to you to identify when the market is actually shifting. So hopefully that answers your question. I know it's not as straight forward as you probably wanted to, but there is no straight answer for that specifically. Sorry guys, let me answer this real quick. Sorry guys. All right, so I think that's it with that question right there for Jay. Let me see what we have next over here. Scrolling down, let's see. CT said DOM, stop loss, and TP are dynamic depending on latest higher high or lower low. It's tricky unless you're using standard TP stop loss. Yeah, no, I agree with the CT. But for the most part, I usually it's like dynamic based on like when you enter and your spread as well. So if you enter and the spread's too wide, you're going to enter like in deep drawdown. But if the spread's not too wide, you should be fine. That's why I usually have at least a 300 to 500 pip stop loss when using the DOM. Let's scroll up real quick. Next question is from, let's see, Miles said tell him about Steven. So most of you guys know Steven in the group. I'm pretty sure majority of you guys do. So Steven, I don't know if he's even in here. Let me see. Steven isn't here, but let me see if I could pull up. So Steven's been part of K2 from like, he's been part of K2 for like years now, for like, I don't know if he's here from like the very beginning, but if you look at like, let's see if I can pull up chat here. So Steven like was doing horrible for like the longest time. The first time Steven joined K2 was like, it's been a long time. So Steven joined K2 back in September of 2000. No, this isn't it. Our chats just haven't loaded. Well, anyway, Steven's been part of K2 for like years now. Anyway, Steven, you guys will probably know who Steven is because he's the guy that's always asking about the breakout in the morning. He's the one that's always joking around about calling Putin and asking him to end the war. You guys probably have an idea of who Steven is because he's usually in the chat, not just the chat, but in the live every morning. He's asking about the breakout. Basically, Steven went from blowing accounts like almost every week because he would bounce from K2 and he'd go to some signal provider and he'd pay someone to like pass his challenges for him. And I kept telling him that, he's never going to get anything positive out of that. And after he lost a ton of money, he finally started to learn how to actually trade with us. The thing with Steven is the way that he got better. Let me see if I can find. So the thing is, Steven's passed like, I don't know how many challenges, but he's passed, I think 2 or 3 challenges in the past month or so. Anyways, long story short, Steven wasn't doing so well, but then what he started to do is he started to just take 1 trade a day. He takes the breakout or he takes whatever we take on the live. That's about it. Once he started doing that, he started passing challenges like left to right, like super simple for him. So one like word of advice I could probably give you guys is if you guys have trouble being consistent, your main problem is probably going to be over trading. Because I've seen a lot of people where they make a lot of profit with us during the live, and then they trade during Asia and they blow all the profits, or they end up blowing their account because they just over trade or they revenge trade. So I see a lot of people make a lot of profits during the live, and then they lose 1 trade once we get off the live, and then they just go into a downward spiral. They just keep taking more and more trades until they end up reaching their daily drawdown or they blow their account. And that's a common issue that a lot of people have. So like in order for you guys to get across that, I would recommend sticking to what we take on the live until you guys are confident with, taking your own trades, because it's a common issue that a lot of people have. people just don't have patience. And it's normal because a lot of people start to treat it like it's gambling, right? And I'm sure you guys have been to the casino before, or a casino, where you guys have been doing well and you're all happy. And then you take one loss and you just keep doubling up, doubling up, doubling up until you lose all your money. It's the same with trading. Not really much different there. So other than that, it's just a quick rundown of like how Steven kind of overcame his issues. And now all he does is take the breakout or like 1v3. That's literally it. And then he passes his challenges easily. So let me scroll up real quick and see if there's anything else that I'm missing here. Scrolling down. Let's see. Valentine's asking, hello, because of work, I can't join all the morning calls, but sometimes I can catch the London Open. Do you recommend the DAX or stick to US 30? So I personally stick to US 30. I mean, it's up to you, Valentine. I don't know if you're good at trading the DAX. I've seen other people trade the DAX. I think Lisa in the group trades the DAX. She's from Australia. So, their time zone is different from ours, complete opposite. So that's like morning for her, or afternoon. You can trade literally any asset you want, Valentine. It's really up to you. If you're asking me personally, of course, I'm going to stick to US 30 because that's all I trade. And that's what I'm really good at. So what I would recommend is to focus on something that you're really good at and just stick to that asset. Like if you really like US 30, then you can trade it literally in all time time zones. Like if you want to trade New York, if you want to trade Asia, if you want to trade London, it's really up to you. If you're good at trading it, you should have no problem trading it no matter the time. You guys have seen my profits. Sometimes I'll make profits during New York. Sometimes I'll make profits during Asia, even though I don't recommend trading during Asia. And I'll still make profits pre-market or during London. So you can make profits with US 30 all throughout the day. It's just up to you. If you like to trade the DAX, then trade the DAX. If you like to trade US 30, then trade US 30. But for me personally, I would just stick to US 30 because that's what I'm good at. Let's see. All right, next question is from Delmas. Delmas said, my question is about bad days. How do you handle them? And how do you minimize them? I know all traders have had them, but you and others in the group like Sisuk and Patricia rarely have them. And I want to rarely have them too. LOL. Today I had one and they're devastating to a trader's psychology. My confidence was really high because I was finally seeing consistency and thinking I was ready to take the next step. Then today happens and I'm like all mad. I know I can't let one day get me down, but today fucked me up tough. I'm not giving up or nothing like that, but I'm tired of blowing money on challenges too. I was so hot this morning, had to go to the marina and just look at the water like I'm soul searching, tired of doing the same dumb shit over and over. So dumbest, you're not alone. Everyone has the same issue. The thing with me and probably Patricia and Sisu is that we're able to disconnect, right? So like whenever I get off the live, I'm like really off the live. If you guys ever message me after the live, I probably don't message you back for like a couple hours because I'm not on my computer. So for a bad day, me personally, I know I don't really have many bad days, but if I do have a bad day, I'll just get away from the computer and I'll probably just take the whole day off. I'll go to the gym, I'll go hang out with my dog, I'll go to the dog park, I'll do anything to stay away from the charts. I think that's a problem with a lot of people. They're not able to walk away. And that's why people end up blowing their accounts because they end up having a bad day. And then they keep trading. And when they keep trading, they just keep losing more and more trades. Instead of just having one trade, they end up with like 10 lost trades and their account's blown, right? And I'm sure that's happened to you because the only way that you blow accounts is if you over trade or over leverage or revenge trade. Because if you're just taking one loss a day, like me, like if I ever do have a loss, because I only take like one loss and I'm done. If you're able to control that and you just have one loss, you have another day to make that back up. So I think the main thing for you is just like what you did today, right? You said you went to the marina and you looked at the water to go soul searching because you're tired of losing. That's something that you could do. If you have one loss, just close up your charts, delete your MT4 app if you have to on your phone, so you don't have to pull it up. And then just go do something else. Come back the next day fresh, your mind is clear. The problem with trading after taking a loss is that your head's not there. Mindset's all over the place. You're looking for revenge. That's what you're doing when you continue trading after you take a loss. So my main word of advice is to just, take a break and step away. for like the entire day, not just for like that session, but for the entire day, so that you can come back with a clear mind the next day. And then when you come back the next day, you're not going to be thinking about that loss. You're going to be looking for some more trades, like actual good trades. One thing that I noticed too is that, since I like you said, me, Sisu, and Patricia rarely have bad days, right? The reason for that's because whenever we do lose a trade, we know it's a bad day. Like we know we should probably not trade anymore that day. So I think that's something that you probably need to work on. If you ever keep yourself to a maximum loss, right? Like for me, each trade, I risk about 2 to 3%. If I lose one trade, I'm like done, because you can only lose 5% per day anyways. So for me, when I lose one trade, I'm just done for the day. If that's how you do it, or if you risk like maybe 1 or 2%, you can probably lose like 2 trades back to back before you have to call it a day. So I think I would just keep yourself to a 1 to 2 loss minimum. If you lose one trade and you want to keep trading, just step away for a bit, come back like in a couple hours. If you just keep yourself to 1 loss minimum, then just take 1 trade. And if it loses, then just call it a day for the rest of the day. Come back the next day and then come back fresh. But I think that's probably the best. That's probably the best way to do it, because it's, everyone handles things differently. Like for me, I've been trading for a long time, so I already know myself. I know if I stay at the computer, I'm going to go in revenge trade. So whenever I do lose, I just step away from the charts, and that's probably going to be your first step. So hopefully that helps, Delmas. I know, don't feel bad, because everyone has the same issue. You're not the only one. I think your main problem is just controlling that anger and revenge, right? Because everyone gets mad. If you lose a trade, you're going to get mad, because it could have been a trade that you easily could have avoided. Like today, you said you had a bad day today, right? But for me, I didn't take any trades, so I didn't have no bad day. For every day, I have like 1 or 2 goals. It's either I make profit or I don't lose any profit. Those are the main 2 things. If you can focus on those things, you're golden, right? Because if you just keep winning, whether it be once a week, twice a week, 3 times a week, it'll long-term point of view, and not force it, because you don't have to force your trades. All right. So other than that, let's see what we got next over here. Swelly said, "Are these the new K2 indicators, Sean? Looks cool." These are the same indicators we've been using, Swelly. I'm not sure which one you're referring to, but these are the ones that we've been using. These lines here are the K2 pivots. The vertical lines are the K2 momentum. The color down here is a K2 trend meter. I'm not sure if you're referring to something else. I might be missing something. If maybe it was a chart I had open earlier, but I can't. Oops. Let's close that. Yeah, Delma said, yeah, I literally came apart at the seams, LOL. I thought I was done with that type of shit, revenge trades, and lost more than I should. Yeah, I mean, it is what it is, Delmas. It's all part of the game. But over time, you're going to start getting better at controlling it. I don't know how long you've been trading for, Delmas, but even myself, I've been trading for 11 years, and I still get revenge trading. I still get FOMO. I still get over leveraging. I still run into all the same issues you guys do. The thing is, it never goes away permanently. You just get better at controlling it. Swelly's asking shows price. So this, to show the price right here, this is a built-in indicator on TradingView. If you want to get that indicator, it's just called the pivots high-low. So if you go over here to indicators, just search up pivots, and then you will see right here, it's called pivot points high-low. It's a built-in indicator for TradingView. I used to have it up a lot before. I don't know if I have it up anymore, but I probably don't usually have it up. It's usually like that, right? So if you want to add that on there, it just identifies where certain highs and certain lows are, like where price pivots from. So if you want to turn it on, it'll help you identify where the high lows are, but it's not necessary, because if you're using the high low indicator, I mean, you basically got it on already, Yeah, no problem, Swally. Delmas said just over 2 years. Yeah, I mean, 2 years is not that long, Delmas. You got to think about it like long-term scheme of things, right? You're gonna eat shit for 2 years, but if you keep trading, you're gonna start seeing results. That's how I was too. Like my first 2 years, I wasn't doing so well. But the thing is, I never had a group like K2, and I never had a mentor. So, you guys have me to ask questions to, and I help with. Me personally, it was all trial and error. So my issues in the beginning were because I didn't have any help. I was kind of just making mistakes and then learning from them. So it's all learning process, Thomas, but you'll get better over time. What I would recommend is to just, don't give up. If you are feeling not so confident, I would recommend just taking small lot sizes until you feel good and then go back into your normal lot sizes. That way you don't blow your account, or just trade on demo. That's, that'll help you the most. So other than that, let me scroll up real quick. See what else I'm missing. Let's see. CT said market is moving well. Can open it up a bit. I'm gonna skip that real quick. Rami said, sorry, I don't know if this was answered already, but I wanted to know with the 1 minute strategy, is it a set TP and stop loss for our trades? It depends on which 1 minute strategy you're referring to, Rami. So if you have a specific strategy, some of them are set TP stop loss. The V3 is set at the previous swing. So that's going to be dynamic. It just depends on where the swing's at. Yeah, so the V3 here, I'll show you an example, or I'll just put the requirements up here. For the V3, and let me just see if I could find an example here so I can show you. Let's see. Oh, the high low. Oh, there we go. Okay. So let me see if I can find a V3 here. All right, perfect. We got one right over here. Let's turn off all the extra stuff. Okay, so we have the high low right there. So for the strategy over here real quick. For the V3, there's no set TP stop loss. So looking at the requirements right here, the first requirement is to identify the high low indicator, right? So you have a high right here with a green candle. You have a falling red candle right here, and then you have a pending sell signal on the way. So what you do is you enter a short position right here. You set your stop loss at the previous swing, which should be right here. It's a little too close. Normally we wouldn't take this trade, but I'm just using this as an example. So you'd put your stop loss right here, and then your TP would be equal distance away. We'll just round it up a little bit because it's too close. So for here, it'd be 150 pip TP and stop loss for a 1-to-1. So if you were to take that trade, there you go, full TP. Let me see if I can find a better example, because that's just, it's too close. So it's hard for you to really identify the entry there. Okay, so there's one right here, actually. Let's go here. This isn't like a really good trade, but it's a better example. So looking at this right here, same thing, another V3. If you were to enter this for a buy, you would put the stop loss at the previous swing, which would be right here, 47 pips. Or let me move it up a little bit. Something like that. Okay, so 470 pips, 47 points. So with this right here, you can see the one previously was like only 150 pips. This is 470 pips. So it just depends on which entry you're taking. It's going to be variable. Sometimes it's going to be wider, sometimes it's going to be smaller. For this right here, if you let it run, there you go, full TP off that one. So let me see if I could find another example here for you. Let's see, there's one here. Okay, here's another one right here. I'll go back over here. Actually, there's no V3 there because there's no pending signal. Here's another one right here. So I'll go over here. All right, so here's another V3. You have a low over here with a red candle. It's followed by an opposite green candle. There's a pending buy signal. You take this for a buy right here, long position. Your stop loss is going to be right here. And you can see how it changes, right? The first one was 150 pips. This one is 280 pips. This one over here is 470 pips. So for this one right here, you'd set it for a 1-to-1. You let it run. And there you go, full TP. So you can see right here, there's a bunch of V3s that came up towards the end of the session. They all hit full TP. So yeah, exactly. So Rami said, okay, I see. Literally crystal clear. Thank you, bro. Yeah, no problem. It's pretty simple, guys. So if you guys have any questions like this, like, it doesn't matter how basic, how complex. I mean, I could help you guys with whatever you guys need help with. So yeah, hopefully that answers your question there, Rami. Let me see what else we got over here. I'm gonna go down the list. So let me scroll over here real quick, scroll back up. Let's see. Patrick said, in the end, you have to find your own style of trading and trust it, especially on the bad days. Yeah, 100%, Patrick. I agree with you completely on that one. Nick said, my problem is that I'm literally just a little bit too conservative. I don't blow accounts, but I don't pass. Yeah. So I think the problem with yours, Nick, is not necessarily conservatism. It's more so you're not using the proper lot size, right? Because you could be as conservative as possible. Like you can be extremely conservative where you take one trade a week and you could still pass. The problem is you're not using a proper lot size. I'm going to break again over here. So if you guys are doing FTMO, because I'm sure you're referring to FTMO requirements, right? So for one, you have a 10-day trading minimum requirement. This is like automatic. It doesn't matter. You're going to pass this regardless. This should never be an issue for you to pass. The second requirement is daily drawdown limit of 5%. This is why I always use 1% to 3% risk per day. That's all you need. Literally, that's all you need. 3, max drawdown limit of 10%. So you can never go below 10% equity. The fourth one here is to reach profit target of 10%. So check this out. So Nick, just like I mentioned right here, right? You said your problem is not passing. Even if you're extremely conservative and you're taking 1 or 2 trades a week, like literally just 1 or 2 trades, and you're risking about 1 to 3%, right? So you have 4 weeks to take a trade. So let me just put this right here. Extremely conservative, 1, 2 trades a day or even a week, right? You're doing 3% risk per trade. If you're very conservative and you're only looking for the perfect trades, how many trades do you need to pass, right? If you're doing 3% risk per trade, you need 10% profit target. So what's 10 divided by 3, right? I already know the number, but I'm going to put it by 3. You need 3.3 trades. I'm sure you could take 3.3 trades in an entire month, right? So your problem here is not necessarily that you're too conservative. The problem is that you're not using proper risk management. So you're not using a proper lot size. You're probably using too small of a lot size, like less than 1%. If you're doing that and you're taking less trades, of course, it's going to be impossible for you to pass. It's basic math, right? If you use basic math to identify how many you need. So like say if you're using 1%, right? You need 10 trades to pass, right? You need 10 trades. So if you're using 3%, here, let me just, let's see, where was that at? Okay. 3% per trade equals 3.3 wins to pass, right? 2% risk. And this is if you're being conservative and you're only taking the good trades, like the trades on live. So again, right here, 10 divided by 2 is going to be 5. I'm going to just put it here so that you guys can see. Divided by 2 is 5 trades, right? You need 5 wins to pass. It's not that difficult. You have 4 weeks. That's literally, you have literally 20 opportunities. Opportunities to reach goal. Like it's really not that difficult. So if you guys do the basic math here, so here's the thing, Nick said I use 3 or 5 lots. 3 or 5 lots doesn't mean anything to me, right? Your percentage is what matters. It doesn't matter if you're using 1 lot, 2 lot, 10 lot, 20 lot, doesn't matter. I don't know what your account size is. If you're using a 20K account and you're using a 3 to 5 lot, okay, so you're using a 100K account, right? And you're doing a 3% risk. So you're using a 100K account, but how much percent are you risking, Nick? That's the real question. Your lot size doesn't matter. It just depends on how much you're risking. I think you don't understand the the whole point of this explanation, right? It's percentage. Percentage is what matters. It's not, okay, but can you give me the percentage that you're risking? Like, I don't need the lot size. Lot size doesn't matter. It's your percentage. How much percentage are you risking per trade? Because then I can break it down for you and I can tell you how many trades you need. You said roughly, I'm trying to like put the numbers together. Because if you're risking 3%, I mean, you should either be passing your FTM or you should be failing it. You should not be in the middle, right? Because you said you're extremely conservative. If you're extremely conservative, it's definitely not, that's not, 3% risk is not going to be extremely conservative. You're actually risking a lot because your max daily loss is 5%. So if you're doing 3%, then you're using proper lot size. If by extremely conservative, this means you're not taking any trades for like the entire week. Like you're literally taking no trades, because if you're doing 3% a week, you only need 3 trades to win. If you look at our trades here that we have, let me just, all right, so let me see. I know you've been part of K2 for like, I mean, almost over a year now, right? So if you've been part of K2 and you're only taking the stuff here on the live, I think what you're doing is you're winning trades with us and then you're losing trades on your own time. I think that's your main problem. Because the thing with this here, let me look at the results. I just want to show you like the breakdown of like, okay, so in January, we had 17 wins and 3 losses. I'm sure you could have pulled at least 3 wins from there to pass your FTMO. Same with February, 17 wins and 1 loss. February should have been a hot month for you to pass your FTMO. If you're doing 3% risk, you should have no problem. With March, we've only had 2 trades, like official trades during the, maybe in March, you probably wouldn't have an issue. But I mean, even if we go back to the results from last year, you should have like no problem, because the thing is you only need 3%. I mean, you need like 3 or 4 wins, right? So, okay, let me see what Nick said here. Nick said, my issue is that I don't let my trades hit TP. I often pull out before it hits full TP. Yeah, I mean, that's another risk that you're taking as well. Yeah, no, exactly. Nick said, I got to let the trades run all the way through more often rather than pulling them before TP. So there goes, you answered your own question, right, Nick? So like your problem was that you're pulling trades too early. There goes your solution. Let your trades run. So, you know, what these sessions are meant for, guys. These sessions are to get you guys thinking. I'm not here to necessarily answer your questions directly, or if it is a specific question, then yeah, answer directly. But for me is to, my main objective with these mentoring sessions are to get you guys thinking. Like, see, a lot of people here have questions, but as soon as I start breaking down things for you guys already know the answer. You guys don't even need me to answer it. So same with like with Nick here. Nick said, it's hard. Yeah, no, exactly. It is hard. It's 100% hard. It's just you letting the trade actually do what it needs to do. And that's the same problem with like, I forgot who I was explaining to earlier, but it's really about just trusting the trade and having full confidence in your ability to let the trade run, right? So, yeah, exactly. So like, let's see what CT said. CT said, if the market's moving and Sean is taking trades, let it run a full TP. If he's not taking any trades, then be conservative. Exactly, like 100% CT. Like for this week, I think we took how many trades? Like 2 trades this week, or 1 or 2 trades that were official, right, Nick? If you took those 2 trades or 1 or 2 trades and you let them run, you would have been basically halfway to passing your challenge, you know, just this week. So I think the main word of advice that I can give you is to really identify what you would be taking. So like if you're taking a trade that I'm taking, let it run. If you're taking a trade that I'm not taking, where I say it's risky, then yeah, okay, of course move your stop loss and profit. So those are the two main differences there, Nick. So I think your main goal or your main objective now is whenever I take trades on the live, then just let them run a full TP. If I'm not taking them myself, where I say they're risky, you're free to take them, but just make sure to move your stop loss and profit when it moves into profit, if and when it does. But if you want to pass, I think you should just stick to the trades that we take on the live. Yeah, no problem, Nick. It's definitely, I mean, it's a, and then once you pass, then you can, I would recommend doing your own thing, but you can take a little bit more risk or less risk. I mean, it's really up to you. Yeah, definitely. So hopefully that helps, Nick. You know, hopefully I got your brain going with the plan. Yeah. So Nick said I got to make 1,200 tomorrow, and I pass. So that shouldn't be too bad. Is tomorrow your last day, Nick? Because if you're doing 3% risk, then you probably need like 1.5 trades or maybe 2 trades to make that goal. Gotcha. Yeah. Hopefully we'll have like 2 good trades just tomorrow, and or maybe even 1.5. You probably, I think maybe 1 trade will probably yield you a little bit over 500. And then if you, or let me just check real quick. If you're doing 3% risk, so 200,000 divided by, or times percent. Oh, sorry, I forgot. You're on a 100K account. So times 3%. Yeah. So I mean, if you're risking 3%, you should be perfectly fine. So you actually only need 1 trade. Nick to pass. Or I mean, you could use even half of this, because the thing is, if you're using a 1.5 lot or even a 3 lot, you're still going to make your goal. So I would probably use a smaller lot size and go for a better move, Nick. Because the thing is, if you're so, or you know, fuck it, you're already you're on your last day, so you might as well just go for it on one go. So if we have an official trade tomorrow, I think you should be good. Just, you know, reach that goal. You can even have a smaller TP. You probably don't even have to go for the whole move. You just need to pass. So what I would do is I would take the trade, and then when it reaches your goal, just manually exit it or have your TP a lot closer, because you don't need that much. You only need 1,000 to pass. So if you can reach that goal, I mean, I think you should be good. All right. Other than that, hopefully it answers your question, Nick. But you know, we do have a game plan set for you. So hopefully you pass your challenge tomorrow. I know it's been a while. I felt like you passed your challenge before. I don't know if you had an accident with that account, but I swear you passed your account before in the past. Yeah, no, exactly. Nick said I'm going to take my. Nick said I'm going to set my TP at passing and take the trade and walk away. Yeah, that's probably your best option right there, so you don't pull out too early. So yeah, man, good luck tomorrow. Hopefully the market starts to move a lot smoother. The market's been kind of crazy the past 2 days, so hopefully it swings back into the back into a directional phase instead of all this consolidation. It's been consolidating pretty much the past 2 days. All right, so let me scroll up, see what's the next question here. Scrolling up over here, let's see what I got. Scroll down. Let's see. Next question is from. Sorry, I'm just kind of lost here. Okay, let me scroll down a little bit. Thanks, Alan. Yeah, this is the new K2 office space. I mean, you guys can kind of see the background of my camera. This is like the big office area. This is meeting area. This actually closes right here. And then there's like individual offices over there on the other side. You know, maybe this year we could have some in-person meetings and stuff like that. We'll see. Just got to figure out how everything works over here. Anyways, next question over here is, let's see, what's the next question here? Next question is from, scroll down a bit. Adam said, hello, Sean. Just wanted to ask you, I went through the online course. I did not find the high-low strategy and some of the and some couple of the strategies you use in daily. I have the rules for these strategies so I can read them and test them. As of now, I do not have an idea about the V1, V2, and V3 and high low. All right, so all right, Adam, let's start off with the high low. Okay, so for the high low right here, you might want to take a screenshot of this. I'll leave it up for a few seconds right here so that you can screenshot it. So we'll go over the requirements right here. The first requirement is to confirm. Let me go to an entry actually. If you want to screenshot that right now, you can go ahead and do that. Or if you want to write it down, feel free. I'll go over an example right here to show you an entry. So there's actually one right here, which is perfect. Go back over here. I'll just mark this up right here and right here. So I'm going to mark up the high and the low. Looking at this right here, the first requirement is to confirm the previous swing high and swing low. So for example, right here, we have a swing high and then we have a swing low. In order to confirm the swing low, you want to make sure that 5 candles have passed after the low has been set. So 1, 2, 3, 4, 5, 6, 7 candles. This is established as the low. The reason why I'm looking for the low here is because we have a sell signal right here, right? If we have a sell signal, we're specifically looking for sells only. So the second requirement, you want to confirm price and break close the previous swing. So let me scroll down real quick. This is going to be requirement number 2. The price is broken and closed past the previous swing. Third, you want to confirm you're trading in the direction of momentum using the K2 momentum indicator. As I mentioned before, there's a sell momentum right here. So we're only looking for sells. With that said, that's the third requirement. The fourth requirement, you want to make sure that price is not ranging or consolidating. So as you can see right here, price is bouncing in between this area. This is a range or consolidation phase. But as price broke below, it's no longer ranging, right? So with that said, the fourth requirement's met. And for the fifth requirement, you just want to make sure that this price has not been touched prior to it breaking and closing. So with that said right there, you take this for a short. You set your TP stop loss to 100 and 300. I know it's never negative risk to reward, but these strategies almost never miss. If you're using them, all right, let me refresh this. Oh, there we go. Okay. So let me go back again and replay it back to that entry candle. So the entry candle is right here. We let it run by 1. And there you go, full TP off the next candle. These are meant to be really quick scalps. However, the more confidence you have, the better. So this is going to be a requirement. This is going to be the strategy for the high-low scalp. So here we go with this right here. The next requirement is going to be, or the next strategy. So we've gone over the high-low. Let me see what your next one was the V1. Okay, so we have that. That's going to be the high-low. The V1 is going to be this right here. So here's the K2 1-minute variation strategy. And just FYI, guys, these strategies are not completely done. They're going to be done shortly. So probably by the end of this month, now that I have this office space, I still need to finish moving my things over. So until everything's moved over, I'm not going to be able to record the new, the videos for these strategies, but they will be pretty much done maybe this month, if not next month. I just got to finish moving my stuff over. I got a lot of stuff to move. So once that stuff's all over, I can go and take some time to record more detailed videos like this, not mentoring sessions, but actual videos explaining these strategies. And then you guys can look at those and that'll be a lot more help. But these strategies have been under progress. So we haven't actually finalized them, but we've been using them for so long where at this point, they're basically finalized. So let me see if I can find an entry for this. And then once I find one, or you can take a screenshot of this right now, Adam, if you like, and I'm going to go look for an entry. So, or if you want to write it down, you can too. There's no one right there. Trying to find a good one. Okay, so there's a perfect one right over here. Okay, so here's an entry right over here for a high-low. So I'll put the requirements right there. The first requirement is going to be to confirm the high-low using the high-low indicator. So you have a high right here. And then you have a low down here, right? With that said, you've confirmed both the high and the low. Right, here's the high, here's the low. The second requirement is you want to confirm the following candle has a double wick rejection. So I'm going to delete this because this is not relevant. We're looking for the high right here. There's no double wick rejection at that point. Right here, we have a high, and you can see for the high, there's a wick rejection, right? And the one for the candle right next to it has a wick rejection as well. It's kind of hard to see, but if you look closely, you can see that there's a double wick rejection right there. So with that said, you're going to enter this trade for a short. And at this point, you're going to do the same thing. These strategies have negative risk reward, just like I was mentioning before, but these strategies all have very high win rates. Like they rarely lose. As long as you're using a proper, you're using proper confluences, right? You're not just entering every single trade. You're looking at retail sentiment. You're looking at fundamentals. You're looking at technicals. You're looking at everything. This is just an example for you guys here, but overall, if you guys are applying this live, you want to make sure that the confluences do line up with it. So this trade is from today. If you guys remembered for today, we had a bearish bias, right? So this is why I would be okay with taking a sell because we were looking for sells during this time. So with that said, you have all the requirements met, let it run. And there you go, full TP for the V1. So there goes the V1. We're now going to move to the V2. So the V1 is done with. Let's see if I can find a V2. Okay, here's a V2 right here. Now, it's convenient because there's so many trades. It's funny because we got off our live at 8. You look over here at like 9, 10, a lot of entries came up, like a ton of them. Going over here real quick, let's see. We have the V2. So these, you'll see that these V1s, V2s, and V3s, they're pretty much the same strategy. It's just different requirements. They're very similar. They're all based off the K2 high lows. You're just finding a rejection off the high or the low and a push in the opposite direction where you can catch a quick scalp. So again, right here, you want to confirm the high low using the high low indicator. We have a high here and we have a low right here, right? With that said, the second requirement over here is that, and let me change this real quick because there is another requirement that we haven't necessarily included, but it is one of the requirements for this. So for this right here, requirement 4 for pending momentum. Sorry, so you might need to update that as K2 1 minute variation V2. K2 V2. Okay, so this is the requirement. I'm pretty sure that's set in the and just make sure this is for all the variations. So this requirement here, let me pull up V1 again. Sorry, guys. I just want to make sure everything here is updated and proper. What is it, V1? Okay, so same with this one again right here. Let me just add it to this as well. This wasn't one of the official requirements before, but it is now because it's been used to increase our win rate like tremendously. So it's definitely a good one to add to confirm pending momentum and direction of trade. K2 1 minute variation. Let's resave this. K2 1 minute. Okay. candle, right? Oops, this cannot, it's weird. It sent me right back. All right, so back to where we were. First requirement, confirm the low. Green, and it has to be a strong candle. In order for it to be strong, you just want to confirm that the low over here, if you're looking for a buy, there's little to no wick on the bottom side, right? So there's no wick right there. With that said, you would enter this for a buy right here in our long position, and pretty much the same thing as we did for the V1. Profit target is 100 pips. Stop loss is 300 pips. After that, you let it run, and there you go, full TP right after. So this is the V2. Make sure you got that, Adam. So I'm pretty sure you probably got this by now. That's the V2, and I think your last question is going to be the V3, right? Perfect. All right, Adam. And then your last question is the V3, I believe. Yeah, V3, and then I think that's it with your question right there. Now let's pull up the V3. And let me see if I can find an entry over here. All right, here's the one. This actually, the same entry right here would be a V3 as well. But I'll go over a different one because we just went over that one right there. Let's go over to, let me see if this is like, because there's another V3 right here, and this would have hit TP. I just want to make sure it's wide enough. It's too tight. It's 160 pips, but you can see right here, 160 pips, it does hit TP right there. I think this might be a little better. I just want to give you a solid example, because we usually want it to be at least like 300 pips from the previous swing. But today just wasn't, I mean, today was a risky day to be taking these V3s. You can see right here, it was actually pretty bullish. So I think at this point we were looking to take buys, not any sells, because I do see some sells over here, or actually I don't see any sells. There's a sell right there, but I probably wouldn't have taken that because it was too small, and it was also bullish. Breaking news, watching CNN right now. So the White House warns Russia they use chemical or biological weapons on Ukraine. Crazy. All right, anyways, here's the example here. Okay, so here's a better example. Let me measure this real quick. No, it's still 300 pips. I'm trying to look for a good one that like has enough space so you can actually see how clear it is when it reaches the point that you're anticipating. Nothing there. No, there's no pending signal there. I mean, today was a wacky day in general. Maybe we should just go back to a different day. Let me just rewind over here and see if we could find one. I don't think there's really much for us to look at here. Let me see if there's one here. How far is this? Nope, too small. Okay, I think this might be a good one. It's not amazing, but it is a little better. So let me just go back right there, and I'll put the V3 right here. All right, so for this strategy here, you want to identify the K2 high low, same as you did for every other variation, right? So looking at this right here, we have the low, and then we have the high. For buys, you want to look for a low with the red candle. For sells, you want to look for a high with the green candle. Right here, we have a low with the red candle, right? So we're looking for a buy at this point. The next candle has to be opposite. So this is very similar to the V2. The only difference with this is that it doesn't require a strong candle in the opposite direction, right? So that's the main difference between the V2 and the V3. So looking at this right here, we have a low with the red candle. It's followed by a green candle. We have a pending momentum for a buy. And you want to confirm the direction of bias with regards to retail sentiment, fundamentals, technicals. We can't check that right now because this was a while back this morning during London session, but we can just use this example and say that it was bullish, even though we're not really sure. So with that said, we will enter this with a long position right there. Stop loss will be right here at the previous swing. Sometimes you want to like round it up, it's up to you. Sometimes you want to put it right at there, or sometimes you want to put it below to cover the spread, depending on how wide the spread is. We'll just use it exact for right now so that you guys can see pretty much exactly how it should look. So right here, the entry would be right there. You enter a buy. Your stop loss is going to be at the previous swing, and you're going to ride this up to the TP, right? We're going to delete this because this is not useful. We're not using that. And then we let this run. And there you go, full TP. So there goes the V3. It's pretty simple. It might seem a little bit complicated at first, but over time, if you keep applying it, you're going to see these very easily. You're just going to look at the trade. You're going to look at the chart, and you're going to see the high low, and you're going to be like, okay, there's a V3, or there's a V1, or there's a V2, and you're going to see a lot of people call it out during the live. And I'm sure you've seen that before, Adam, during the live sessions. People call it out all the time because everyone sees them. They're very easy to identify, and then I'll confirm it, and then we can take it. So I think that's about it. Let me see if there's anything else here. I think that's it, Adam. Sure, no problem, Adam. So thank you so much, Sean. So no problem. Hopefully that helps with all your questions there. I know you're new, so this is all brand new to you, and this is going to help you identify entries and anticipate your trades before I even take them on the live, right? Because a lot of times I'll kind of be distracted a little bit answering questions during the live, and since you already know the requirements, you can already identify it because you'll have my chart open on your screen, and you'll just be looking for these variation entries. So perfect. So hopefully that helps. Nice. Yeah, John said awesome. That was going to be my question as well. Yeah, so hopefully that helps with all your questions right there. I'll scroll back up and I'll see what else we got next over here. See, I'm using 300 pips times, I'm using like a 3,000 pip or 3,000 risk for most of my trades. So basically I'm using a 300 pip stop loss and I'm using a 10 lot. So my risk for most trades is going to be 3,000. If we do 200,000 divided by 3,000, it's not right. Let me do 3,000 divided by, sorry, my math sucks. All right, so my risk is 1.5%. It's a really small risk. This is why like I don't really ever have issues with my trading. This is why my trade psychology is not screwed up, right? Because I'm only risking 1.5% per trade. That's why if you guys ever look at my profits, they're usually going to be around, right? I mean, it just depends, right? If you have a bigger TP or a bigger stop loss, it's going to be a bit different. But for the most part, my risk is going to be around 1.5%. So between 1.5% and 5,000, that's usually my other stop loss if the trade's bigger. I usually don't go past 500 pips. It's just too much of a risk. I don't like risking too much. You know, if I have to eat the loss, it's fine, even though I rarely do eat the loss. So my risk is between 1.5 and 2.5%, John. So this is what I would consider proper risk management, right? Most of the time, I'm only applying the V3. That's why I'm not really applying the V1. I'll apply the V1 sometimes, the V1 or V2. If I find a really good one and I'm really confident about it, yeah, I'll take it. But for the most part, due to the negative risk to reward, I don't really apply it as much because the V3 is better. And if you're just patient enough to wait for the V3s, you have no problem because it's a one-on-one risk to reward. So if I lose 1.5%, my next win will just make it right back and then have another win following that. And I'm great, right? It's back in a profit. So, you know, this is this is why I don't freak out about my trades. If you guys ever see me take a trade, you never really see me like freaking out. Sometimes, yeah, sure. Like if I enter a trade on accident, I'll be freaking out because I'm like, I know I shouldn't be in that trade. But if I'm entering a trade and I'm using proper risk and I know it's a good trade, like I'm not freaking out and stuff. If I eat the loss, I'm like, oh shit, my bad. In my watch. If I lose the trade, then I already know the market's screwed. So that's why I always recommend that you guys stay patient and you guys only look for, you know, high quality trades. Because if you do that, you should have no problem with consistently growing your account and not getting anywhere near your max daily drawdown. So like if I'm only risking 1 to 2% or 1 to 3%, I'm never going to risk my max daily, right? Because I'm never going to get to that point. I take one loss and I'm done for the day. I'm not revenge trading. So yeah, no, definitely, Adam. Yeah, hopefully we can have, you know, a meetup here or something like that. That'd be great. At some point, it'll be fun, I think, to have everyone trading here live. I think that'll be, it'll probably get everyone more geared towards confident trading. Because if you guys feel confident trading with me on the live, like, just imagine trading with me in person. You guys are gonna feel like 100% ready to take these trades. So other than that, let's see the other questions over here. Yeah, of course, Rick. See the let me see if I got. I don't know if you can see the kitchen back there. It's a full open bar. We actually have another bar here downstairs. It's like a. This is. I'll send you guys a video later if I'm there, or maybe on Thursday. So we're having a happy hour here. We do have a couple bar areas, which is pretty cool. You can like bring your own keg and like put keg into the little kegster or whatever it's called, and then you can just have a like legit open bar. Other than that, let me see if there's anything else over here that I'm missing. Adam said I'll pay for the bar, right? All right, let me scroll up. I want to make sure I'm not missing any other questions before I get caught up with everything below here. All right, so question over here from Madhu. Madhu's asking, if you're risking 3%, for example, on a 1 minute pivot scalp, you would only be making 1% profit, right? So you need 10 of those trades, something like a V3, though you can risk 3% both ways because it's 1-to-1. So that would be about 3 or 4 trades if I'm risking 3%, I think. Yeah, so Madhu, you're 100% right. And that's why I only take the V1s, V2s, and high lows or triple confluences when they're like almost 100% sure going to hit, because they're kind of like free gimme trades, right? That's what I call them, like a free gimme, because for those trades, they rarely lose if like all of the confluences line up. So if you're taking those trades, it's just like a free percentage to bump your account up. The real trades that I'm looking for are the V3s, because those are less risky and it's for a 1-to-1. So you can win one and you can lose one, you're at break even. The 1 minute pivot scalps, well, I never use those by itself, but if you're using the triple confluence, if you remember from like September up until like November, there were like 0 losses. So I'm confident in that strategy if it ever comes up. So if I do take those, I call it a gimme because it's like a free percent, right? Like, so like you just make a free 1,000 off that trade if you're trading a 10 lot. Because it's, you know, odds of it hitting are like close to 100%. So I don't necessarily apply those very often, but if I do see them and they line up like really well, then yeah, I'll take it. And I won't even think twice about it. I'll just take it and I'll let my TP hit. I'm good. Yeah, for the most part, you guys should probably be using the V3. That's why I mainly use a V3 on the lives, because it's the safest trade to take on the 1 minute. Other than that, let me see if there's anything else that I'm missing. And I got to figure out a way to keep this light on. This light keeps turning off on me. I don't know how to even realize if I'm here or not. Whatever. I don't know where the sensors are at. Whatever. You guys can still see me on the camera. It's not too dark in here. All right, so let me see what else we got over here. Next question is from Roland. Oh, I just saw your thing over here. Roland's just for my question. You're answering Adam, who essentially had the same question. Oh yeah, perfect, Roland. Yeah. So if there's anything else that you want me to dive any deeper into those strategies, Roland, feel free to let me know. I know you've left for a bit and you're back with K2. So if there's anything specific you want me to cover, just let me know, and then I can go more in detail. But I think I pretty much covered it for the most part. Let's see, anything else down here? Jay's asking, so does sentiment take priority over fundamentals when they are opposite? Yeah. So Jay, so I'm just gonna put everything over here. Order of confluences. So the first confluence is going to be retail sentiment. Retail sentiment. So this is always going to be number one. Number two is going to be fundamentals. And three is going to be technicals. So for the most part over here, retail sentiment is always going to be number one. If retail sentiment and fundamentals don't align, you're going to go with retail sentiment, but you want to make sure that it's strong enough for it to really hold its ground, right? So looking over at retail sentiment, let's see. Right now, so let me refresh this. Okay, if retail sentiment is below, say 60%, like right now it's 54% long, it's not going to be very strong. So if you have this showing up as 54% and you're trying to pair it with fundamentals, it's not going to be very useful, right? Because the thing is, if there's only 54% of retail traders on the long side, this can easily shift from long to short, within a few minutes or so. So if this becomes a case where it's less than 60%, you want to be more on the 65% side, or even 62%. You're probably going to disregard these. You're going to look at the sentiment, but you're not going to use this as an end all be all. You're probably going to want to use the fundamentals as a stronger confluence. But for the most part, it's always going to be, it's going to take precedent over the fundamentals as long as it's strong enough to hold its own ground, if that makes any sense. So yeah, retail sentiment, fundamentals, and then technicals. Technicals are just, it's just the final confirmation. But for the most part, technicals don't even really matter most of the time. Because you'll see sometimes where price will be super bullish. Let me just show you real quick. All right, so for example, right here, price is super bullish, right? But it doesn't even matter because price will be super bullish and then all of a sudden it comes all the way down. This is why I don't really use technicals as a main confirmation. It's going to be retail sentiment, fundamentals, then technicals is like the icing on the cake, basically at the end of the analysis. Let's see, other than that, see if I'm missing anything else over here. So let me scroll here real quick. I think that's it with that question. I'll move this over real quick. Maddie's asking, can you go over trade psychology, how to build up discipline and consistency, also getting out of a trading slump? I already know what to do, but just want to refresh, and I think other people want to hear it too. So Maddie over here is asking, a basic question regarding trade psychology, which is an issue that everybody has, even myself. I've been trading for so long, but I still have issues with my trade psychology on certain days. So one way to build discipline is to, when you take a trade, you should just let it run to TP. The same thing that we discussed earlier with Nick. Nick's problem earlier was that he exits his trades too early, right? One way to fix that is to take a trade off the depth market and just let your trade run to full TP or to stop loss. That's like one of the main things you can do. Another thing you can do is to take a trade, set your TP and stop loss, and walk away. That's going to help with your discipline. Another thing that you can do is you can just take what we trade on the live. If you take what we trade on the live, that's going to increase your confidence, because if I'm in the trade, it's probably going to be a good trade because I don't just take any trade. Other than that, it's really pinpointing what your issues are. So the thing with Maddie and the thing with a lot of other people, the main things that, here, let me just put them down over here. So Most common issues traders. So one of them is going to be trade psychology, obviously, as a whole. Psychology. The second one's going to be. Second one is going to be over trading, or let's see, not over trading, but revenge trading. Third is going to be over trading. Fourth is going to be over leveraging. Fifth is going to be, what's the fifth going to be? So, trade psychology in general. Let's put trade psychology in general. This all of these are under the umbrella of trade psychology. It's gonna be trade psychology, revenge trading, over leveraging. I think that, this should probably be, okay, this is probably going to be like maybe, we'll add at the bottom. I was going to add this to the top, but this is, I feel like this is everyone's problems. Entering random ass trades, right? And I'm add ass there because this is everyone's issue. People enter trades, there's no trade there, and people just enter a sell because they think price is coming down. And this is probably gonna be Rick here. You know, Rick will see price coming down. He's like, all right, I'm gonna enter a sell. And sometimes it'll play out, you know, maybe like 5 out of 10 times it'll play out. That one time that it doesn't play out and you don't pull out of the trade, and sorry that I'm throwing you under the bus, Rick, but you know, that one time that it doesn't play out, you end up not having a stop loss and you let it run until your account blows, right? And it's not just Rick, it's like everybody. It's not, I see this all the time because it's funny when, well, I mean, it's not funny, but some people will be like, hey, Sean, I'm having issues with trading. And I'm like, okay, what strategy were you applying? And then they'll say the V3, and I'm like, okay, let me see like, what time did you take the trade? I'll look up the trade. And when I look up the trade, there was no V3 there. There was no V3. There was no nothing there. They just took the trade because they thought price was going to go in that direction. And then when I respond, the person has nothing to say because they realized that there was no trade there. So this is like really, I think if you guys look at this list right here, I'm pretty sure if you guys are not consistent or you guys have not been successful, your issue is going to fall under one of these right here. At least one of these. Trade psychology in general. Revenge trading, that's one of the main things too. What I see a lot of people do is they'll take one loss and they'll keep taking more trades. So these go hand in hand. Look, so trade psychology in general, because people won't hold the trade to the full TP, or they won't even like put a stop loss in there. It leads to revenge trading. When they go to revenge trading, that's where entering random ass trades come into place, because they'll have an actual good trade and they'll lose it, and then they'll start entering whatever trades they see. And I'm sure this applies to almost everybody here, including myself. I've done it before and I've gotten lucky a lot of times, but that's only because I'm using a different analysis, right? So like I see like liquidity and I'm like, all right, there's technically no entry there, but I'm still entering it because I do think price is going to go in that direction. So I think these are like a lot of the main things that are problems that people have. Once you guys are able to overcome this, you guys will be very consistent. It's just, you know, it's just checking off the list. But yeah, for the most part. So I just saw Rick, Rick's thing here. He said, I'm about 2 and 50. And Jennifer said, yeah, I get heated in YOLO trade. Exactly. Jennifer said, I start screaming at the market, give me my money back. Yeah. So, and FOMO too. So thanks Milazan and Dave right there. So, revenge trading, over leveraging, and FOMO. And FOMO trades. And if you guys are not familiar with FOMO trades, FOMO is basically fear of missing out. So say, for example, here, I'll use this for example right here. We'll just use this right here. So I know there's no entry that's here, but say, for example, you enter a short that happens right here, right? For whatever reason, you enter a short here and price has already hit TP right here, right? So say it hit TP, like right there, and then it pushes up a little bit, right? I'm sure this has happened to almost everybody in the room. Price pushes up a little bit and you're like, oh man, I want to get into this trade. So the trade's already technically done. It's like literally done. It's hit CP and you enter another position like right here. For whatever reason, I know people do this all the time. They enter a position like right there and they're like, oh yeah, I'm gonna catch the last like whatever drop here. And then they let it go. And then at this point, they're in some massive drawdown. And they're like, whatever, I'm gonna keep holding on to it. And then it goes up and stops them out. And they're like, they get so upset. So they enter the FOMO trade. FOMO should probably be up here. Like, because what happens first is trade psychology. They get into a FOMO trade, they lose, and then they revenge trade. When price pushes up like that, they end up taking the opposite position. So they're like, all right, I lost this trade. Price is going to have to go up. They enter a buy at this point. This is where revenge trading comes into play. And then they lose that trade, right? And then they're like, all right, you know, I have another try. Like, I got to go again. They enter another trade right here because they think, oh, they see this huge wick. And they're like, yeah, price has to come up, right? They go here, and what happens is they enter with a smaller stop loss, but a huge lot size. They go in with like a 10 lot, and then they have like a 150 pip stop loss. And they're like, all right, price has got to push back up at this point. They enter again, and they get stopped out again. From there, and that's where all this adds up, right? It's like the first trade over here was a FOMO, revenge trade, over trade, and then they over leverage on this one right here because they want to make all that profit back from that one loss. They're like, all right, I'm going to go heavy on this one trade. And then at this point, they have their third or fourth loss and they've blown their account. And I'm pretty sure this has happened to almost everybody. It's happened to me too. Not anytime recently, but a long time ago. You get too much into your emotions and you just let the trades take control over you. So yeah, Jonathan said that was me on Monday. Yeah, no, exactly. Rick said I do that too with challenges. So this is kind of the good thing about challenges, right? So with the challenges, you have a set amount that you can lose. Like for example, if you buy a 200K account, you could lose like 1,200, which is your challenge fee. The thing is, I see people do this with their personal accounts and they have like 10,000 in the account. That's where it becomes really bad because you're not cut off at 1,000 loss. You get cut off when you lose all your money. So a lot of people don't like challenges or FTMO and stuff like that. But I do think it's better because it kind of cuts you off at your losses. Instead of losing more than 1,000, you're kind of tapped out of 1,000. And then you can just start another challenge and make the same mistakes until you actually get it down. But my goal here is to make sure that you guys don't make these mistakes. These are the common issues right here. And, you know, it pretty much applies to everybody here, including myself. Yeah, no, Amazon said I've learned to stick to a lot size. Same here. That's why I only use a 10 lot for pretty much all of my trades. Yeah, Jess said it sounds like me a lot as well. Patrick said, yep, I had to learn that there's always going to be a next trade, just like there's always going to be a next wave in surfing. Yeah, exactly. And that's a good analogy that Patrick said. Not sure if a lot of you guys here surf, but you know, if you guys do surf, I used to surf. If you miss a wave, you're not going to go and try to swim after the wave. You can't swim fast enough to catch that wave. You're going to wait for the next one. And it's the same with trading, right? You just let that wave pass and you wait for the next one, and you ride that one to the next move. So other than that, let's see. Yeah, Remy said, literally sat out the last 2 days, almost got sucked in and fought the battle with my head to trade on a choppy day. Yeah, no, exactly. Rick said only kooks chase trades, right? Jennifer said I should probably drink and surf. You should probably drink, trade, and surf at the same time, Jennifer. Go get a waterproof computer. Pretty sure Rick's done it before. And drive. Oh, man. All right, let's see what else I got over here. Let me scroll up real quick. I want to make sure I didn't miss any other questions here. Jennifer said, when are we having in-person trading at the office? I'm ready to move to Cali. You can use a taser on anyone who trades out of strategy. That'll teach me, right? Rick said, Kip and I plan on doing that. And our dog on the surfboard with your laptop. So you'll be trading, surfing, drinking, and walking your dog at the same time. Multitasking right there. Let's see. Yeah, I know Jennifer said I'm doing it all. Let me just scroll up. I want to make sure I didn't miss any questions here. If I missed any of your questions, guys, just drop your question again in the chat, and then I will go over it. I just want to make sure I didn't miss anything here. I'm gonna scroll back up. So Maddie, I think I answered your stuff there with trade psychology. The next question here is from John. John's asking, I'm trying to wrap my head to the difference between the V2 and the V3. It looks like V3 has a pending. So it does. So John, I'm not sure if you just joined the room like right now, but I did add that to the requirements here. So I'll put the V2 right here. The main thing is that it's just a strong candle. So V2 and V3. So let me just put these, yeah, they're right there, right above each other. So for the V1, or the V2 actually, the main difference is it has to be a strong candle. That's literally the main difference. It needs a pending candle as well, a pending momentum as well. But the main difference here is just the fact that you need a strong candle. That's pretty much the only thing. So if you're looking for a buy, you need a strong candle with a strong green candle with no wick on the bottom. Vice versa for a sell, you need a strong red candle with no wick on the top. So that's pretty much all that is different between the V2 and the V3. Scroll up. Let's see what else I'm missing here. Scroll down real quick. All right, so let me scroll down a little bit. We got the next question is from Jez. Jez said, was asking, so what is the advice to strengthen trade psychology? The main thing is to figure out what your problem is, Jez. Like in order to get better with your trade psychology, you got to figure out what your problem is, right? So like, for example, I have all of the main issues right here. You got to figure out what your problem is. Is your problem revenge trading? Your problem over trading, over leveraging, FOMO? If you know what's your specific problem, you can pinpoint what to do, because you can just think about like, what are you doing to make those mistakes, right? If FOMO is your problem, then don't FOMO, right? I know it sounds easy, but realistically, it's really as easy as it sounds, right? So like, for example, if you FOMO into trades, you got to make sure that you don't enter trades after they've already passed. If you don't enter at the proper entry point, then don't enter the trade. That's how you'll control your FOMO. If it's revenge trading, if you lose a trade, then your best option is to just step away from the computer, like maybe turn off your computer, uninstall MT4 if you really need to. That'll stop you from making revenge trades. Over trading, same situation. If you lose a trade and you tend to take too many trades after your loss, just close the app, get away from your computer, go find something else to do, and then come back the next day when you have a clear mind. Over leveraging, this is easy. You just have to find a set lot size to use, or a couple set lot sizes to use for your trades. Like, for me, I always use a 10 lot. If I'm using a bigger stop loss, I'm going to use a 5 lot or a 7 lot. I already have like a set amount of lot sizes to use. Other than that, I think that's pretty much, for the most part, the main thing that you can do to fix your trade psychology. Everyone has different issues with trade psychology. It's really figuring out what your problem is and pinpointing that so you can make changes to avoid, those bad trades in the future. Let's see. Other than that, let me see if there's anything else up here that I'm missing. Yeah, no problem, Jess. So I think that's it with Jess's question. Swelly's question here is asking, what's the best way to trade the mid-market reversal? Your analysis always plays out, right? Just never sure when the best entry is due to manipulation. So what you could do, so I'll look at let me show you what it was like today. So let me go and mark up the mid-market reversal today. What I look for is I look for entries in the opposite direction, or I look for a shift in bias, right? So let's see. So market was right here. The mid-market reversal actually happened right over here. So let me just go and draw these right here real quick. So as you can see, price was pretty much bullish throughout the session. And I mentioned that around mid-market, price was going to reverse to the downside, right? So the main way that I identify when the mid-market reversal will happen is either when price hits liquidity or if you see an entry in the other direction. So if you're following this right here, swelling, check this out. Okay, so we technically have a V3 right here, but I wouldn't have taken, or technically, let me see. There was another V3 right here. So if you remember, like from the live sessions, I always tell you guys, I won't take the first V3, but I'll take the second one, right? So right here, we have price. I'm trying to see if there's another. So here's one way to do it. There's a ton of different ways. The main ways for me to do it is to identify specific entries. So like, for example, right here, it's at 10 o'clock, right? This is where the mid-market reversal tends to happen. If you guys remember, I always tell you guys from 10 to 12 is mid-market reversal time. 10 to 12 or 10 to 11, right? Price is bullish pretty much all morning session right here, literally all morning. And then around 10 to 12, price tends to go opposite, right? So one way to identify this is look for an entry. We have an entry here for a V3. And you can see that that V3 did hit TP right there, right? Not one that I would have taken, but it did hit TP right there, right? So right there, I'm like, all right, the V3 hit. I'm not gonna take the first one, I'll take the next one. Again, right here, there's another V3. So same situation there. So I would have taken this trade right here. If I was still trading, I wasn't trading during this time, but if I was, I would have taken this trade because it's a second V3. So if I was to take this trade right here, it hit my TP, right? That's one confirmation. Another confirmation you can use is the whole confirmation of the break and retest, right, of the area. So check this out. This is one confirmation if you took it with the V3. Here's the next confirmation, right? The same pattern that I've been showing you guys every single morning. Price is broken below this liquidity. That's step one. Step two, price comes up and retests the area of liquidity right here, right? And then you're looking for the confirmation, right? You're looking for it to confirm back below. What happens right here? There goes step two, the retest of liquidity. Right there, actually. Look how it fails to close above, right? It's a perfect pattern. You see it come right below right there. You need confirmation that it's coming down. It hasn't come down yet. Again, right there, right? It retested again right there. It hasn't closed above. So as long as it doesn't close above this line, it's not going to push up, right? It's going to go one direction or the other. It's either going to go down or it's going to go up. So it hasn't confirmed yet. There we go. Price drops back below. You need price to close below this area right here in order to confirm it. Right there, it failed to close below. Right there, it closed below. There goes your golden key, right? At this point, you're like, all right, for sure, price is going to drop. Look what happens. Check that out. See, mid-market reversal right there. So I mean, there's different ways to identify this. You can use the V3, you can use a different strategy, but this is probably going to be your best pattern right here. And it did exactly what I just, what I mentioned. I didn't realize it would come down so perfect. I'm actually kind of shocked that I'm kind of surprised myself right there. I was like, damn, it actually went straight down. So looking at this right here, you also want to look for the momentum, because if you have momentum, it's going to continue in that direction. So, I mean, there's different ways of doing it. There's no one way to do it, right? It's like with trading, there's no one way to trade. I have multiple strategies. They all work. You just got to figure out what works for you. So that's how I identify these, these mid-market reversals. Other than that, let's see. Let's see if I'm missing anything over here. Make sure I'm not missing anything over here. All right, cool. So let me scroll back up. Hopefully that answers your question. I forgot who asked this. Sorry, let me try to figure this out. I forgot who asked this question, but Swelly. Okay. Yeah. So yeah, hopefully this helps with your question there, Swelly, because it does help if if you, and the thing with this is it all comes with practice, right? Like you said, you're never sure when the best entry is going to come. The thing is, you're never going to be 100% sure. It just depends on how many confluences you have. The thing is, we were expecting a drop right here, and it played out perfectly. So what I would recommend is just keep practicing, practicing, practicing. The more and more that your analysis plays out, the more you'll trust it and the better you'll get at taking these trades. It's the same with me, right? Like I wasn't always good at trading, especially not trading live. You don't see too many people trade live like how I do because it's risky, right? You don't want to, like, the thing with me is like I didn't want to trade live, and a lot of people don't like trading live because this shows like true transparency, right? Trading live is not easy to do. You have like hundreds of people watching you trade every day, just waiting for you to fail. It messes with your mental. It's like trade psychology, except my trade psychology is like getting affected like times a million because I have to take the trades. I have to explain, I have to give my analysis, and I still have to take the trade and show profit, right? It's not like where you can just trade, and if you lose a trade, you can just hide, right? I can't hide. If I lose a trade on the live, I'm still on the live. I can't just sign off and be like, all right, like you guys still see me, you guys see my emotions, I'm on camera. So it all comes with practice. So if you want to use this mid-market reversal, you just got to keep practicing until you get really good at it, and you don't second guess it at all. It just comes with time, practice, and repetition. So other than that, let me see, I think that's it for that right there. So let's see, Madhu said, if you've seen that in real time, do you think you possibly would have taken that candle? Not the V3, but I would have taken it if we had that confirmation where it broke the liquidity and retested, because that's usually what we look for. In order for you to take trades, like I mentioned before, you have to like look for a bias, right? There's no bias in the market. Like right there in that, I already deleted it, but in the markup that I had earlier, there was like a very strong bias there. If you have the bias at that point, then yeah, of course I would take it. But I would probably take it with a smaller lot size because it's still a risky move one way or the other. So other than that, let me see if there's anything else that I'm missing here. All right, so I'll answer the question right there for, sorry, we got a lot of questions. We got a lot of messages here. Let's scroll up real quick. All right, so that's Swelly's question. Jez, I think I answered your question already, right? Regarding trade psychology. It's really just figuring out, where your weaknesses are and focusing on that. Jennifer said, is there a quiz to find our problem? Yeah, I mean, just look over your losing trades, right? If you look over your losing trades and you reanalyze them, I'm pretty sure you could point out exactly what your problem is, right? And I'm sure it's going to fall under one of those things that I listed earlier. All right, let me scroll down real quick. Roland's asking, what's your preference for the strategy currently, the V3 via 1 minute, or it varies depending on the market conditions for the given day? Most of the time it's the V3, Roland. But if we do see entries, so for the other strategies like the high-low and the pivot scalp, I only take them if they're a triple confluence, meaning that there's 3 strategies that line up with 1 entry. So I'm not just taking a pivot scalp. I'm looking for 3 different strategies, but they all line up with the same candle. So let me show you an example here. Because the thing is, all of the K2 strategies have a high win rate. But if you have 3 K2 strategies and they all line up on the same exact candle, odds are that trade's going to hit, right? Because the win rate's super high already. If you're doing three separate strategies and they all line up on the same exact candle, odds are that trade's probably going to hit, like really hit, right? So let me see if I can find an example here of a triple confluence. These trades are hard to come by though. You don't really see these too often. So that's why they're ones that I would take if I would see them, because these trades will come up maybe like once every couple of days, or no, it'll probably come up once a day, but during the live session, probably like once in a blue moon, like not very often. But when it does come, like that thing hits, like it really hits. Like I would probably go like super full lot size if I ever see a triple confluence, which I have done before, because I don't think we've ever lost a triple confluence trade. Like never. I don't think we've ever lost. But the thing is, these trades barely come up, so you don't see them too often. Like Patricia, I don't know if Patricia's here. Patricia's been applying this triple confluence for like, I don't know how long she was applying it for. I think she was applying for like 6 months and she had 0 losses, which is crazy. Like I haven't even tested it that long. She was testing it before I was testing it. So let's see. I think we have one. Now, you know, the thing is the market's been super choppy that there hasn't been any of those types of entries lately. I know there was one last week, but I don't think there is one that came up anytime recently. Anyways, you know, short answer to your question is, yeah, the V3 is going to be the main strategy that I apply. If I'm applying any of the other ones, it's usually because it lines up with another strategy, either a double confluence or a triple confluence. All right, scrolling down, let me see if there's anything else here. Jennifer's asking, what time frame are you guys trading V3? So we used to trade it on the 5-minute, but for the most part, I do it on the 1-minute now. That's usually the main one that I trade it on. But it was originally applied on the 5-minute before. See, this week's been very different. At least I'm not losing, just taking trades during the day. Let's see if there's any other questions here. Let's see. Scroll down a little bit. Easy fix. Let's see. I think that's it. Let's see if there's any other questions. I don't think I see any other questions here. Squelly's asking if there's a free momentum indicator. I don't think so. That's the main reason why I created this indicator myself. So I developed this indicator because I didn't find any momentum indicator available. I mean, you could find something that's kind of similar, but it's not going to be as accurate as like what we're using. You know, it's a whole, like if it was available, I would have never created my own indicator, but there wasn't one available. That's why I had to create my own. You'll see a lot of momentum indicators out there, but they're not really based off momentum. They're based off other things. And there's different ways to identify momentum, right? Some people look at it as using like MACDs, but those are technically divergences. It's just a divergence in a direction. The thing with this momentum indicator is that it uses different parameters. It's not just one thing. It uses a lot of different parameters to identify where momentum is going. So unfortunately, I don't have one to refer to you, but I mean, you can play around with the free ones. I would just be really careful when applying those, because you know, if there were good free ones available, I wouldn't have created any of these indicators. But I've tried like pretty much all the indicators that are similar to what we use, and none of them come anywhere as close. Because this wasn't easy to develop these indicators. It was, I mean, it took a lot of trial and error to figure out what parameters work best for them. Let's see. See, Rami's asking, do you find MFF to be good? Never used it. I'm just an FTMO guy. So I think MFF is probably the second best that you can use, Rami. I still prefer FTMO as number one, but MFF is good as well. It's just, it's up to preference, but I would definitely max out FTMO first and then do MFF once you've already maxed out FTMO. Madhu's asking, in your opinion or experience, what was the most difficult part about creating an LLC company? It's funny because people think it's really difficult to create an LLC. It's like all you do is fill out a form and that's it. I don't know why. Like people will pay like companies to set up an LLC for them. Literally, all you do is go to the website. Like it's like it blows my mind. Like I see people pay these like things called what is it, like LegalZoom? Like why do you guys need LegalZoom for? You can literally Google it. I mean, a lot of people are just lazy and they don't want to look it up. But here, I'll just show you right here. So if you're in California, who asked that question? Madhu, I don't know where you're located, Madhu, but I mean, if you let me know where you're located, I can probably just or I'll show you California. Okay, so this is what you'll do. You do California state secretary. So I'm going to Google it. I'm going to show you exactly the search to create an LLC here in California. Like it's extremely easy. Or you could even Google it, like how to create LLC in California or whatever state you guys are in. It's not that difficult, right? People will do this, literally Zen business, where they'll pay $50 for someone to create it when you can literally do it yourself. It's just filling out your information. Okay, so you're in how to create LLC in Ohio, right? You just do that, and then you go to your Ohio. Usually it's like your Ohio, it's the same thing. It's like California, Ohio State Secretary. For me, I was looking at California State Secretary. You go over here to Ohio. This is all, like literally all you do. You go over here and then you go to domestic business entities, right? Because you live in Ohio. You click that right there. And then you just fill out the form for corporation. So this is what it is. It's 99 bucks. I'm pretty sure there's different requirements for it, but like literally for California, you just set up your, like you'll click on this. It'll give you your form. See, and all you do is you go here and you submit business filing. You put your information right there, you sign up for it or whatever. I'll show you the California way because I'm not from Ohio, so I don't know like the specifics, but if you just go here and you Google it, so you go to NerdWallet, forming LLC in Ohio. It's extremely simple. You just go here and it gives you the step-by-step thing right here. Choose the name for your LLC. And then this is the same website that I was on, right? Frank LaCrosse, Ohio State Secretary. That's the same website that I was right there, Frank LaRose. You search it up, you file it, and that's pretty much it. The filing fee is 39 bucks. Articles of organization is 99, and that's pretty much it. 150 bucks and you're done. I mean, technically you could pay someone to do it, but it depends on your state. Like for me here in California, so I'll do California SOS. I know how to do it in California because I'm in California. So California SOS, you just go over here to business entities, biz file California, file online. You go to LLC formation. Like it's literally just clicking. So you can see right here, it costs 75 bucks to create an LLC. Super simple. You hit start, hit accept. So Madhu is over here and he wants to do an LLC, right? You go to LLC. You want to call your company Madhu K2 Trading LLC, right? That's all you want to do. Click next. Your city. I don't know what city you want to be. Newport Beach. I don't know what the zip code is. We'll do like Irvine, right? Irvine 92614. Address. Just put up a random address. I don't know, 2400 Bronca Parkway, Irvine. Right? Same. Next. You're an individual. You put your name. I'm not gonna put this in here, but I'm just gonna it's gonna write this in here so you can see how easy it is. 100 Bronca Parkway, 92604. You just put your one manager, you're by yourself. Organizer name. Let's do Nelly@gmail.com. And I'm not going to file this, obviously. I'm just going to. And that's pretty much it, right? You submit it, and there's your LLC. You started your company. It's really that simple. That's how you do it here in California. I'm pretty sure it's the same in Ohio as well. It's hit next. You put your credit card information, you pay for it, and then you got a company. That's as easy as it is. So it's not difficult at all. And then once you start to make, so my company is taxed as an S corp. And once you start to make more money, like, man, I freaking paid. I don't know if well, actually I told some of you guys, like this year I paid the most taxes I paid my whole life. It's fucking crazy. I did file my taxes yesterday and it just blew my mind because I was like, damn, this is how like the government freaking rips off business owners. Because usually I don't pay that much in taxes, but I want to buy a house. So I had to report. So it shows that I make, a certain amount of money to buy the type of house I want to get. And it's just crazy. But once you have your LLC, mine's taxes in S corp, you have that opportunity to taxes in S corp. Usually LLCs, like there's like different levels to it. It starts off at like sole proprietor and LLC. Once you start to make a decent amount of money, you want to be taxed as an S corp. Like once you start making like over 50K net, then you should probably elect to be taxed as an S corp, because then at that point you'll be able to pay yourself as the CEO of the company. So you'll pay yourself your own W-2, and then that's like all a tax write-off. So, at some point you'll get to there, but yeah, creating an LLC is not that difficult. Just Google how to find it, and then you can probably look at this Nerd Wallet thing right here, and it'll show you exactly how to form it in Ohio step by step. So, other than that, I think that's it with that question. Let me see if there's any other questions here. I just saw your messages right there, Jennifer. My bad. Took Jennifer's bookkeeping business away. CT said you should file in South Dakota and use the money you paid to buy another multiplex. Claim you live there but rent it. Yeah, no, exactly. No, I'm looking at South Dakota, Oregon. There's a lot of different states where they don't have. I think it's a state income tax. I'm looking at a lot of places around there. But yeah, no, definitely that's next step for me. I'm looking for investment properties. If you guys know any good syndicate investors, mortgage fraud. No, but not necessarily for not necessarily doing what CT said, but buying a property there and technically living in that area, because you have to manage property. Well, technically you have to manage it, not you specifically, but you can have a company there and you can technically be registered there. But who knows? And there's a lot of ways around it. But yeah, I think that's it, guys. So if you guys have any other questions, I think that's it for all the questions. If I missed anything, feel free to put your question in the chat right now. We can just cover it before I log off. But we've been on this mentoring session for a little over 2 hours now. So I think it's time for me to take a break, grab some lunch, and chill out until the next live session. Rick said you can't get a loan saying, yeah, no, I mean, if you're doing an FHA loan, that's definite fraud. I wouldn't do an FHA loan for a multiplex anyways. It's impossible to get. It's, the multiplex is just too expensive to get with a FHA. It'd have to be a commercial loan. So. Definitely no problem. Rami said, thanks for today, Sean. I'll cut up, go again tomorrow. So other than that, guys, I think that's it for this session. If you guys have questions, feel free to email me or message me on Telegram. Otherwise, I think that's it for this session. We'll be back tomorrow for the next live session in the morning. But yeah, other than that, feel free to reach out. But otherwise, we will be wrapping it up, and I will see you guys tomorrow for the next live session. So see you guys.